We're going to be talking commodity outlook and where these markets might be going in the year ahead. And more specifically, we're going to be talking about some strategies to use for risk management in the year ahead. It's one of those years that we're starting off with a lot of uncertainty on the production side of things. One of the biggest El Ninos on history seems to have peaked, is starting to retrace back to ENSO neutral, maybe all the way to La Nina in 2016, and that's the big question mark that everybody's got for the 2016 growing season, is how much influence the transition from El Nino to ENSO neutral or La Nina might have on the cropping conditions here in the Midwest. So typically a real quick transition means that we're going to have some kind of a problem in the Midwest, somewhere in the Midwest, that could lead to lower corn yields, lower bean yields, and maybe give us a better pricing opportunity. It's not necessarily good news on the revenue side of things. A lost bushel's a lost bushel, but it might give us a little bit better pricing opportunity. When we think about the impact of trendline yields in 2016 on the price outlook for the year ahead, I'm going to be a little bit more positive on corn than I am on soybeans, just because we've got such a heavy supply, or anticipated heavy supply, of soybeans left over at the end of the current marketing year, the 15-16 marketing year. Over 400 million bushels of soybeans left over at the end of the year is just way too many, and it gives us too thick of a supply side cushion when we get into the 2016 growing season. It just means that we'd have to lose more bushels from trend line to really have an impact on the bottom line and to reduce our carryover in any significant way. Corn's a little bit different story. 1.8 billion bushels is our expected carryover at the end of the year. But if you start off at 164, 165, something like that for a trend line yield, if you back it off just 5%, it changes the outlook for us considerably for the year ahead. So take 7, 8 bushels off of that, get us down into the high 150s for a national average corn yield, and there's the opportunity for some strength in the corn market. I'm not saying that we're going to see $6.50 corn or $7 corn, anything like that. But there is a possibility, if we get into some problems and scare the market a little bit with some less than ideal growing conditions, we could see another $4.50 opportunity in the cash market for corn, especially up here in the upper Midwest. Every country around the world grows wheat. It's harvested 12 months out of the year, and it's a much different situation. We've been dealing with heavy supplies for a very long time on the wheat side of thing, and at the same time we're not doing much to expand our usage. As a matter of fact, we're less competitive in the export market now than we have been for quite some time because of the strength in the US dollar, and as that dollar continues to show strength, we continue to show weakness in our export picture. This is the time of the year, if we're going to do a little bit of catch up, this is the time of the year that we should be catching up, and we just came off our weakest export sales week of the year, and of the marketing year, and that's exceptionally disappointing. Now we are starting to see just a little bit of an uptick in some of the demand out there, but it's for the hard wheats, it's not for the soft wheat. And soft wheat, we're dealing with some competition from the guys up north, and it's a tough situation in this wheat market right now. The best thing that I can say about the wheat market is the funds haven't liked it for a long time. They've been on the sell side of the market. They're short. If all of a sudden they decide to completely get out of that short position, that could give us a little bit more of a lift, continue the lift that we've seen since the start of the year. And that, I think, though, is going to be one of our better selling opportunities, because they've got lots of moisture out in the plains. That's something that we haven't dealt with for quite a while. So the expectations for the hard red crop are really pretty good. The global side of things, and Argentina really is kind of a game changer this year. They cut their export taxes on corn and wheat, and if you don't think that it was having an impact, just look at what happened just 10 days after they did that. All of a sudden Argentina is selling wheat into Egypt, and they hadn't sold wheat into Egypt for 2 or 3 years in any significant way. So they cut their export taxes and boom, we're moving wheat into Egypt. But Egypt is now, I'm not exactly sure what they're doing with their phytosanitary standards. They've rejected a couple of 3 loads of French wheat for a fungus that's in that crop there, even though it met their tolerance levels. So they're getting a little picky with what they're importing, and when you're talking about the world's biggest wheat importer getting picky, and this is a country that's got to have wheat because of their subsidized bread program, that tells you that there's plenty of wheat out there, and Egypt's just trying to churn up some additional competition out there in the marketplace. And then on the corn side of things, we've got to watch what goes on in Ukraine. Even though Argentina is more competitive than what they had been now because they cut their export taxes, we've got to look at what's going on in Ukraine. They're becoming the supplier to China and Southeast Asia. That's taking export demand away from the U.S. as well. And then on the soybean side, Brazil's going to grow something between a 98 million ton and 100 million tons of soybeans for this year. They're just starting to harvest it now. Early yields aren't very impressive, but there's still a lot of time left to harvest that crop. They're going to have exportable supplies in place by the end of February, and once they get there, because even though the Brazilian farmer is getting paid more per bushel because of the cheap real and the high-priced dollar, that cheap real makes those Brazilian soybeans that much more affordable to China in particular. You know, this is one of those years when we look at it, it's going to be another tough year. We're looking at negative returns in a lot of places. On the 2015 crop, anything that's left in the bin is probably going to be carrying some red numbers. And then it's hard to pencil out any kind of a positive return for 2016. That's why when we talk about marketing strategies, if we do get some kind of a spring rally based on any kind of a weather scare, if a spring rally gives us an opportunity to make money, by God, make some money. Make some sales on that move. Maybe use some strategies that are going to keep open your upside price potential. But when profit opportunities come along for this 16 crop, grab them.